This is not financial advice. I'm recording my thoughts about Zscaler. Zscaler is a cloud security company that provides zero trust exchange between anything that is connecting to anything. The stock is currently trading at about $112 with a market cap of about $16 billion. For the past 12 months, they made about $1.35 billion of revenue. So that's a price to sales of about 11. This is expensive, but at one point of time, this stock was trading at about $368. So the stock has come down significantly, but is still expensive. But right now, it seems like a good opportunity. So how are we going to judge whether Zscaler is a good company and it will continue its revenue growth and get to profitability in the coming years? One thing that we can look at is Gartner's Magic Quadrant for Security Service Edge, and you can see Zscaler is the leader and there's no other company that's close to it. And we can also look at the revenue growth year on year and also quarter on quarter, and you can see this company grew its revenue by about 42, 56%, 62% annually in the financial years. For the past 8 quarters, they grew their revenue north of 52% without compromising their gross margins. Let's look at their trailing 12-month income statement. As you can see on my screen, they made about $1.35 billion of revenue, and you can see on the gross profit, it's in the order of 80%, which is really impressive. And on top of that, their operating income is about minus $300 million. So that means they need at least $300 million to survive in a year. And when I look into their cash position, they have about $1.9 billion of cash and cash equivalents. This $1.9 billion is sufficient for them to operate for the next few years without raising more cash or get a debt. Let's look at the share dilution. We do know they give significant stock-based compensation. As you can see on my screen, in 2019, they had about 124 million outstanding shares, and in 2022 they have about 141 million outstanding shares. That's close to 3 or 4% dilution year on year. In addition, I see outstanding equity incentive awards and senior convertible notes that contribute to about 10 million additional outstanding shares. So that also contributes to dilution. Let's look at 2027 valuation for Zscaler. I'm going to show 2 cases. First case with reasonable assumptions, that's going to serve as a base case based on which I'm going to make my investment decision. And I will show another valuation if they do great execution. But for the purpose of investing, I'm going to rely on the base case, right? So let's look at the base case. We do know in 2022, they made about $1.1 billion of revenue, and they are growing their revenue in the order of 50% plus in the past few quarters, right? But I'm going to assume only 30% growth rate for the next few years. And this definitely is conservative in my opinion, because Zscaler is a leader and this industry has addressable market north of $90 billion. But I'm going to keep numbers conservative. So with 30% estimated growth rate year on year, they can make about $4.1 billion of revenue in 2027. They have gross margins in the order of 80%, so I'm confident they can get to 30% net profit margins. So with that, the net income would be about $1.2 billion for this company. For a company that's growing in 30% plus rate and then 30% gross profit margins, I can assume a multiple of 30, but I'm just going to assume 27.5 for this case. And with that, this company's market cap would be about $34 billion. With respect to number of outstanding shares, I'm going to have an optimistic view here. Currently, they have about 145 million, and we do know another 10 million are going to be added to it because of the incentives and the senior convertible notes. But I'm going to assume only 3.5% dilution for the next few years, and that's going to result in 172 million outstanding shares in 2027. In my opinion, this is optimistic. They may dilute us more because they have significant stock-based compensation. The good news is that they have $1.9 billion of cash and cash equivalents, so they don't need to raise more cash or get a debt to continue operating. So with 172 million outstanding shares, the stock price in 2027 would be about $196. Current stock price is about $112, right? So that's about 76% gain in 5 years, which is not too bad because these are conservative assumptions. And when I look into the case with great execution, I changed the estimated growth rate to about 37%. I kept the net profit margin the same, and I applied a 30 multiple, which I think it deserves if it continues to execute the way it is doing now. In that case, the stock price in 2027 would be $258, and that's more than 130%. That's a great gain. In conclusion, I'm definitely tempted to buy this stock at $112, but I think I'm going to wait for it to fall to about $100, and then I'm going to take a position in zscaler. Let me know your thoughts in the comments. Thank you so much for watching.